Hello guys, let's review and break down this CAD JPY price action using top-down analysis. So currently we're in the daily time frame, and as you can see, price has been pushing up after tapping into this demand area right around here. Okay, so it means that if we drop down to the 4-hour time frame, we'd expect to see a series of higher highs and higher lows to support this push up. So going down to the 4-hour time frame, now in the 4-hour time frame, you can see how structure has presented. You can see, I'm going to mark it out. You can see from here, we had the push down. From here, we had the push down. From here, we had the push down. And this was where the last break of structure happened. So it means that if we expect this trend to continue, you'd want to see price pull back, tap into this demand area here and push up to create new structure. All right. So we're going to mark out this demand area to see price come into it, and it means that this high becomes our draw on liquidity. Okay, this is the high we expect price to take out if we want price to continue to deliver bullishly. All right, so let's go down to the 1-hour time frame and wait to see if we can get a mitigation of this area. So playing price. Now you can see what happened. You can see how price pushed down aggressively and took out liquidity from this area. Okay, so it means that we already have liquidity taken out. I'm going to mark this out. See how price came down, took out liquidity very aggressively. So it means that liquidity has been taken out. So what do we want to see next? We want to see price give us a change in state of delivery. All right, so that we can now confirm that yes, price is now ready to push up to create new structure to take out this draw on liquidity. So going down to the 15-minute time frame, because I like to take my change in state of delivery from the 15-minute time frame. All right, so let's play price and see. Great. Now in the 15-minute time frame, you can see that we've gotten a change in state of delivery. You can see what happened here: sweep of liquidity, push down and push up. Okay, so it means that price has now taken out this high, giving us a change in state of delivery. So we'll be looking to take our entry somewhere around here. Okay, we're going to take our entry somewhere around here. So I'm going to put this and put my stop loss maybe somewhere here to give this space to breathe, and I'll be targeting internal range liquidity. All right, so let's play price. Now you can notice how instead of price to push down to tap into this PY that we marked out to buy, you can see how price is pushing up aggressively, right? And this is because of how price took out liquidity here. You see how price came and aggressively took out liquidity and reversed immediately. It means that there is enough momentum. The buyers have enough momentum, and price may most likely not come down to this area. So what do you do in scenarios like this? You just want to follow existing structure. You just want to follow structure that market is presenting itself with. So let's mark out the structure. You can see from here, we have this push up, we have this, and we have this, meaning that the last internal break of structure happened right around here. Okay, and what is the PY that caused that? This particular PY here. So we can now decide to take our entry off this new PY that we've marked out. Okay, let me do this. Right, so we can now put our limit order here and expect price to give us entry so that we can take this trade, so we don't miss out on this trade. So you can decide to put your stop loss below here or below here. I'm going to put it below here, and you can target the draw on liquidity. Okay, now usually I would target internal range liquidity, which will be somewhere around here for my take profit. Okay, but because of the kind of momentum that this price is pushing with, is sure that it is certain that price will definitely take out this draw on liquidity. Okay, so let's play price and see if we get an entry. So playing price. Now you can see what is happening here. You can see how price is reacting off of this fair value gap area. You see, tapped into it here. I'm going to show you. Let me mark this out. Tapped into it here, pushed up, tapped into it here, pushed up, tapped into it here, pushed up. Okay, this is showing that the buyers have enough momentum. So if we're able to get an entry here, this would be a very clean, sweet buy trade into the upside. Okay, so let's play price. And mind you, this is where lots of traders, all these traders that used to trade support and resistance, will not say that this is double bottom. You see something like this, you say that this is a double bottom trade. this could potentially be liquidity, because some of them now they'll say, oh, price has been, they'll say, or even triple bottom self. You can clearly see this. You say that this is a triple bottom. So they'll expect that the next time price will come in here, it will tap into here, they'll tap into this, whatever is here, and push up. Okay. This could well be liquidity for this POI here. This could be price engineering liquidity for this POI here. Okay. So let's play price and see. So playing price. We have this nice mitigation here, and boom, TP hits. Okay, so nice clean trade using top-down analysis works every single time.